Hi, Warriors. NFP, no frickin' problem. Who's ready to react? Hi, Alexander. You survived another week. Okay, I think it's time, and it's a very important stage in a career to learn how to survive. Otherwise, you don't have a career. The next step is from survive to thrive. Okay, I want to start hearing that we thrived. I thrived this week, not just got through it. Okay. We don't go to battle without winning some, right? Okay, TGIF to you, Steve. Mike, AJ, Paul. Hi, Kman. Blake, how are you? James. Steve is in Rhodes. Okay. So many islands. Blake, do you know if there's an island called Lucadia? Because,
Lucadia?
yeah,
No, but that's a town right in right just south of Encinitas, isn't it?
yeah, but it was an island. That's what someone told me, a Greek isle, and that's
Oh,
what it was named after. So
Lucadia, Greek.
yeah,
Island.
yeah.
I don't know. I mean, I've never been there.
All
Uh,
right,
it's Lucadia. Yeah, I guess there is. Yeah, there is.
all right, all right. So
So,
like a lot of the immigrants that came here, like all the most of the street names are Greek. Okay, so in
yeah.
Lucadia, yeah.
Okay.
A-
So
Anyway,
just so you guys know, Leucadia is actually it's up near the Peloponnese. So it's not like in the Cycladic Islands when everybody thinks like Greek islands. They
oh,
tend to
okay,
think of the Cyclades where like Santorini is and whatnot. No, this is
yeah,
kind of northeast. No,
okay.
northwest, excuse me. Yeah.
Well, anyway, someone told me it used to be a popular island where the Greeks went to. So when they immigrated over here to, God, a beautiful, really, Leucadia is known for their plants and flowers and everything grows.
Mm.
So, yeah, so they picked a nice spot. Maybe one of Steve's relatives was on the boat, uh, or Stelios. Anyway, here's the story of the week. Yesterday we had a key reversal in Nasdaq, a key reversal in S&Ps. Was my second successful S&P trade of the week, but this one was like, haven't had one of these in a while. 145 handles in the S&Ps in a day. I think it's important. This key reversal. We're getting follow through. I think you have to sell rips, and we're going to attack different daily moving averages. This one's a natural 6140, which is the prior highs before the crash, right? So it'd be natural for it to come back to a prior high. It's classic technical analysis, and I actually think that we'll get through that and try the 200-day over the next few weeks or so. NASDAQ even worse, bigger reaction to the downside. Even, what you had yesterday was a stop hunt. I mean, we didn't make new highs after those knocked the cover off
Did,
the ball
Did you see that was
earnings.
a did you see that was a bearish engulfing yesterday? And by the way, you were laying
Yeah,
in shorts yesterday, so well done. I wasn't brave enough, although I did put in a pattern in play yesterday
yeah,
at the close because of the bearish engulfing candle.
yeah,
I mean, it was just that's a classic setup, but and
yeah.
obviously S&P just continued to fall after that. But you really hit that one, Dale. Good job.
Thanks, thanks. It's a key reversal, is what Edwards and McGee would call it. That's when you make new highs for the move, all-time highs, and you take out the prior day's highs and the prior day's low, which it did, and then close near the low. It was a little bit more pronounced in Nasdaq because Nasdaq was weaker than S&Ps yesterday. And the Nasdaq, I think somewhere in the 21s, maybe about 10%, 21 and a half, maybe 21 in the next couple of weeks. So anyway, that uh, was a great trade. Okay,
Yeah.
so anyway, let's talk about currencies here. We're about to make new lows in the euro here. This dollar's relentless. Want to start with my trading warrior brother Kman. What are you thinking ahead of the number here, buddy?
Good morning, Dale. Good morning,
Good
Blake.
morning.
Good morning,
Good
everybody.
morning. Good morning.
What am I thinking about the dollar? It's going to have to be a very bad report for the dollar to reverse. And then it's still going to be a case of which currency one trades, because risk will be involved, right? I think if you get a really, really bad one, which would be earlier than what the market is now anticipating, which is rather going to be August, September or so, yeah, risk is going to get hit, and then equity markets will probably drag everything down. So you have to be a bit careful which one you will be trading then. I've got a couple of scenarios. I think if it's a real bad one, the best is probably be to do the euro dollar. And this one, the cable, sterling is a risk currency, and sterling hasn't been doing well over the past session and a half. So I would be less tempted to buy outright cable if the report is really bad. I think euro sterling could push higher, and putting a cap onto the cable. Um, no, I think euro dollar is probably going to be the cleanest one if it's a real bad report, and then perhaps followed by the Aussie, because Trump
That's what I
is
was
pretty
thinking.
mild toward Australia on the tariff side. So I'm in the crosses. I'm a little long Aussie dollar. But if the report defies all laws of gravity and continues to be better than expected, just a global dollar thing.
Okay.
The dollar is probably going to just continue to rally right now. And then you're probably talking about what, 112, 112 and a half on the euro dollar yen hitting 152, cable hitting probably 100, 130, and you can go on.
Yeah.
The list can go on. Yeah, because I
Okay.
mean,
Have you covered your copper shorts?
I haven't traded the copper. I'm not
Uh,
trading stuff that moves
uh,
20% on the back of one person
uh, yeah,
driving the
isn't that
boat.
something? Yeah. Okay. Are we approaching some zones in silver
Yeah,
that you're
for
going to
me
be
we
in?
are. For me we
Okay.
are. As I said this morning, I think give me somewhere 35 and a half, 35.
Yeah, there's
Um,
a
and
level.
I'm, well, maybe even a little earlier. Yesterday I already bought it, but then I said like, okay, before NFPs, let's just lob it out again. So I took like what, 30 cents or so on it, and that's it. But there's going to be a difference between gold and silver. And if you look at the divergence between both, is that probably, and I know you like to look at the gold silver ratio.
Yes.
Bad report is probably going to push the gold silver ratio higher. Very good report is probably going to push it lower. And that's where I think we can see some divergence between then gold and silver this afternoon.
Okay. What are the expectations?
100K around there. And as I said on the Flow Show, we have to know that 80 around because nobody has the exact number, but around 80K is the line for
Trump does.
creation or job destruction. Okay, so
Mhm.
anything above 80 is still going to be all right, but then we will for sure have to look at the unemployment rate. If we stick around 4.2, 4.3, still not going to be a disaster. But if you start to print 4.4, 4.5, then it's going to have to make the dollar bulls rethink a little bit, I think, because that's
And Kman, can I
uh,
jump in here just really quick and mention
Yeah.
something
no,
regarding that? Just
no.
because the
No, man.
oh he no, just because the number is, as you're probably, I don't know if you're going to accentuate this or not. The unemployment rate's probably the more important piece of
Yep.
information. So So if we have, like, let's say the jobs report, let's say we create 60,000 jobs, which I would say is borderline oh shit data, you know what I mean? But if we print like just we create 60,000 jobs, but the unemployment rate ticks up to 4.2%, which is expected. I think you could actually buy that because the market initial reaction would be sell dollars and then they're going to come in and scoop up dollars right after that. But if it's accompanied with, as you're pointing out, a higher unemployment rate at 4.4%, and let's say we create 60,000 jobs, I'd get the hell out of the way. I think
Yeah, but that's
that's
exactly what I said on the Flow show as well, and
oh, okay.
yesterday as well. We were talking about that in the room as well. I think you have to look at the unemployment rate is going to be the more important. Yeah, just look at a combination of both, and then we will have a better idea. The thing is, as we were saying, two job reports before the next FOMC meeting. But if this one is a real crap one, then he might tell us already something at Jackson Hole. If this
Well,
is
it's that
just,
time of year already for Jackson Hole, huh?
yeah, I know they're diving into the
God, I
hole.
can't believe how fast everything is going.
I was saying exactly the same this morning. Already
Yeah,
August, and we
yeah,
just started 2025. Huh? I think
yeah.
there's a reason for it for us feeling it goes that fast. It's because of your president. He's keeping us busy every day. Um, so yeah, it's going to be a combination, but I exactly what I'm thinking. The unemployment rate is going to be mega important.
I just want to point out one difference in the technical structure in
Mhm.
the yen here. Okay, we had a confirmed high here, which said, most likely it wasn't going to be the high. And then we had a confirmed high here, which said most likely it's not going to be a high. And now look, okay, I know we're a little over 70, but you don't need your cursor to see that we're not confirming new price highs here in the yen. So
Mm.
I'm not saying it's today, but I'm saying the character and the momentum is beginning to wane. I think there's going to be a short in there maybe next week. Maybe get a pullback and one more stab, but I'll be stalking yen for a short because it's doing this now.
Yeah. I don't know if you trade crosses, Dale, at all, but imagine we have a good report. I would not really go and
Yeah,
sell dollar yen, but if you really want to be long yen, you can't do it in a market which prints good reports in long yen. I mean the currency. You
yeah,
can't do it in a market that prints a good report in the US. I mean, it's just my personal view, right?
right. I agree. Yeah, I agree.
But
So I
if
mean,
it's a if
maybe the S&Ps are saying then the next couple of weeks, the people are going to be worried about growth. Okay, and
yeah.
if we get a 10% sell off in Nasdaq, you would think that the yen would rally, U.S. dollar yen might come off.
Yeah, but yeah, then you because the rest, yeah, yes, it will come off, but I would still say that the crosses may maybe even go faster
Okay.
because of the situation in Japan as such right now. They, by the way, they are still trying to negotiate the trade deal with the US. That
It's
thing
still
has not
not
been,
done.
huh?
Uh, it's still not done.
No, I mean, well, in the US's mind, it's done, but in
Yeah,
Japan's mind, it's not done. And I think that's still going to weigh somewhere on the yen. But
yeah,
if you get a real crap report, the yen is going to go down, right?
yeah.
But the crosses will probably go.
It's still a good week, so I would expect follow through strength in U.S. dollar yen next week. Weekly, the pattern you close good on Friday, you get follow through into Monday and Tuesday, sometimes Wednesday.
And don't
So,
forget we closed well above the 200 DMA. So I think the 200 DMA is going to be huge support today on the dollar yen.
all
Where
right,
where was
great,
Any
that?
great
dip.
point.
Where was that
200
date?
day.
I'm sorry. I can't what'd you say, Kay?
There's a
Where was that?
breakout.
Oh, 49 and a half.
Hmm.
Yeah, right there.
All right, okay.
So it looks like a breakout out of an ascending triangle, doesn't it, Blake?
It's
Where
yeah, it's bull. That's why my hope today is we get a number that comes in a little bit below the headline. So, let's say we create 80,000 jobs or 70,000 jobs, enough to freak everybody out. I don't care if the unemployment rate's 4.3%. It could be 4.2, 4.3. I know that's a two ticks higher, 2.2% higher at 4.3% than last month, but I don't care. I mean, as long as it's not horrendous, we get a dip in the dollar yen, I'm buying it. So,
Yeah. You
that's
were
the way I'm
all
looking
over
at
the
it.
yen in the last few weeks, trading
Kman's been
alongside.
over it. I jumped on the train a little late, but still, hey,
Yeah.
sometimes getting on the train a little late, still getting on the train. So,
Yep.
Yeah. Yeah. So you have to stand until someone gets off. Big deal.
Hmm.
You'd
yeah,
give
yeah.
your seat to a lady anyway, Blake. I know you.
I know,
So,
old lady, like, your
yeah,
age.
yeah, I know. I know you mean the women I would date now. All right.
Hey,
Anyway,
you
what's
know,
your mom's phone number?
but what's funny is I was at the gym yesterday and I forgot I had to get my app set up because I forgot my card and the general manager is like, wait a second. He's like, you're born in 1972. And I'm like, okay, I'm gonna take that as a compliment. And he's like, yeah, he goes, I wouldn't have guessed
Yeah.
that. And
Yeah.
so see, I I could do younger here. See, this is the
All
thing.
right.
All
Yeah.
right.
Okay.
Anyway, hey, look, I want to point out a couple of things as we go into this because I think you know we have to have a clear plan, and I'll just say this is one of the things. If you're in the Forex Analytics chat room, I do want to point out. These are the conversations we have way long time ago. Now, I know this is the jobs report day, and so we're obviously, we're obviously going to talk about it here, but on a daily basis, this is what we're the types of discussions we're having. You see all the charts that are posted and talking about setups and what we're doing. And I'm going to just read to you guys what is said. So the US dollar setup is pretty easy for me today. If we have strong data, you have to chase the dollar higher. And I say that I know how many key levels we're at. I mean, you can point out 100 of them and you could go, well, Blake, the euro's at the 161% extension. Yes, but we are consolidating at the lows. The 618 retracement is still, about 80 pips below, and the rising trend line is about 100 pips below. So those levels are not untouchable today on strong data. Don't forget that the market is so squarely position short dollars
Hmm.
and long gold. Those are the two most aggressive positions, and we're in day two of an unwind. Not like 4 weeks into an unwind. We're 2 days into an unwind of dollar positions, 3 days maybe. So there's still a lot of downside in the euro US dollar or a lot of upside in the dollar on a big beat. And remember, people are betting against the dollar going into today. They think that this is the month that we're going to get weak data. You have banks. I can't remember if it was Citi or Goldman that was like they put out a report earlier this week. They're like, oh, people are way too optimistic on the jobs reports, going into this month. Well, what if we continue to buck the idea that we're going to start losing jobs soon, and we come out with a strong report? Uh, how often over the last since 2022 have people been betting against the US dollar, betting against, a strong jobs market, and have consistently most of the time been on the wrong side of that? So don't write off the dollar. Strong data, we might have to chase it. And again, then, I go out to outline why I would buy a pullback, which we've already talked about. But these are the types of conversations we have in the Forex Analytics community. So if you don't and you have not taken advantage of locking in the low 40% discount off of our to month subscription, make sure you do that now because you get grandfathered in. Um, oh, we were talking about the patterns in play and what justifies them and how we play those. And these are conversations that we have all day long in the chat room. So if you're not in there, get in there. All right. Now, Kman, I want to ask you this since we're talking about currencies. What is your best? idea on dollar strength today, and what is your best idea if we get dollar weakness, and would you even play that?
Yeah, I think dollar strength is I'd say dollar yen in cable.
Okay.
Um, well, and dollar cat is probably gonna go hit 140 if it's really a strong report. If it's a mild one, as I said, I think we are going to find enough dollar dip buyers to counter anything. So anything under 150 or so on the dollar yen, I was saying, I think it should be finding sellers. If you get a little blip in the cable, 32, 32 and a half, 33 is all good levels to lean against, I think. Um, but if we get a real crap one, we may see a surprise perhaps in the euro dollar. I would say watch 115 on the euro dollar. 114 and a half, okay, but on a real crap one, that's probably going to be too close even. But I'd say watch 115. If 115 gives today on the euro, we may see a surprise rally unfold. And let's not forget that euro is sometimes is an inverse risk currency sometimes. Huh? So
Safe haven,
if
yep.
if the risk, yeah, if risk is really getting hammered, euro crosses will probably fly, and that's going to add power to the euro dollar. And it's really one of the kind of only ones I would trade if it's really crap. Maybe buy gold again. And if it's a real good one, I'm hoping for silver to go down to 35, 35 and a half, and then I'm going to start to leg into or add to my very long-term longs again.
Okay, and just this silver market, yeah, we have this breakout point that's going to be really big here around the
Yeah,
3480 level.
yeah,
Yeah.
That should be pretty big. It's a 38% retracement of this entire move.
Great
So you
look.
could it was capped at the 161% extension and the rising
Yeah.
trend line and divergence and blah 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 blah. So anyway, any dip in oh shit, I didn't want to do that. Any dip in silver down to 38% retracement right here, 3520 to 3480
exactly.
should be really good support down here. Now, I do want to say that if here's on a really good piece of data, this is the one that I want to be long, is I want to be long the Swissy. The market is we've been talking about all week. Kman's been talking about it. I've been talking about it. I've seen other analysts talking about it, about the Swiss demand that has come through every month at the end of the month. And the very last second of the New York session, the Swiss pairs basically fell and then reversed. Then you got the news that Trump's going to impose the 35% tariff on Switzerland. There's articles in the Wall Street Journal talking about luxury goods and how bad that's going to be for Switzerland, blah 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 blah. Anyway, the dollar Swiss is has been beaten down with the ugly stick big time. And so if we get strong data today, I could see the dollar Swiss reaching for like this 83 cent level. Now we're at 81.60. So a real strong piece of data. I mean, I have the bull flag that would actually point us to 82.50, but I think we can go a lot further than that. And let's just not forget how far down these Swiss pairs have been hit and how
Yeah.
the interest rate differentials of, you got
Negative
Switzerland.
rates.
Yeah, they could be going into negative rates, and here we are, maybe not even cutting rates. You got this week where we're walking away going, shit, are we going to get two rate cuts this year? Or how about if we even get one? You know what I mean? So when that interest rate differential starts to spread like that, I think the dollar Swiss is a great look, especially if the data is somewhat weakish and you see the dollar Swiss pull back a little bit to 81, 30, 81.20. Just like the dollar yen, I think these are going to be great on dips as long as the data is not completely horrible. And if it's strong data, I'm with you. I'm with you, K-Man. We have a very good head and shoulder pattern. We're almost at 161% extension. The UK economy is, I mean, you guys, you know probably better than anybody. And I know if Ryan was here, he's turned kind of sour for the first time in a long time on the UK economy. Um, I think we could very easily see, 130
Yeah.
today. I mean, we start breaking down, and
You know,
again,
we predicted the right shoulder before it happened. That we
yeah,
could have a right
yeah,
shoulder. Remember that?
yeah, and it's developing and it's been playing out pretty well. I mean, I even put in a pattern in play
You did,
right when
yeah.
it broke, right when it broke. I guess it was on the 28th, which is only last week. Was it
Yeah.
last week or is it
Yeah.
Monday? Shit, that was Monday. I can't remember. It was
So
Monday. Damn, it seems like forever ago.
the
Um,
point is, Blake uses his imagination. I use my imagination. So before scenarios unfold, we look at a chart and go, wow, look to the left and go, wow, might get a right shoulder because this is major support. And then when it's there, because you've already processed the thought, it's much easier to execute
yeah.
because it was something you were thinking about could happen, and then it's right there in your face, and you have to do something.
Speaking of something right in our face too, the US dollar Norwegian krona, we're above the
Yeah, look at
38%
that.
retracement. We're about ready to rip.
Yeah.
See, these are the types of currencies that we've been, really focused on that just haven't quite moved yet. And again, strong data, we're all going to be chasing today, and that's just kind of the way it's going to be. I'm
Yeah,
I'm hoping it's not super strong,
I want
but
to ask you and Kay, Blake, do you think this dollar rally could actually move the Fed towards easing? I know they're not supposed to worry about the dollar, that's, the Treasury, but is it possible that financial conditions are getting tighter during a dollar rally, not just the
um,
Fed not doing anything, that it might move them to ease if the
K,
dollar rally continues.
Man, do you want to handle that as I prep over here
So
to get ready?
not right now, Dale. I mean, we would really need to. Oh, I don't know, man.
Like have a 110 euro, would that do it?
No,
109?
no,
No?
absolutely
Okay.
not.
Okay.
Parity maybe, but
All
not
right.
110. No,
Okay.
absolutely not. No, 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 no. I don't think so. Now, the Fed is one thing, but you named the other one there, the Treasury. Besant is probably going to come out because Trump doesn't want a strong dollar. So
Okay.
I think we rather would have to look that way. But no, you know what? And the thing is, if if we start to really ramp higher in the medium to long term yields, that may be perhaps one or the other factor. But then they would first stop QT and then
Yeah.
perhaps even go back into bond buying. But I don't think they will change rates because of the strength of the dollar.
Okay.
You know,
You
bring
know,
remember the 1990s when Germany was having rock bottom rates and still the whole market wanted to buy German mark, right? Um, it doesn't change much. I, I don't see what a quarter, even 0.5% is going to change to the currency.
okay.
I
Thank
wouldn't
you, bro.
no.
I get these wild thoughts sometimes. It's
Oh
so
yeah,
great.
but you
It's
can.
so great to have someone stabilize
I
me.
mean, Dale, make a note of 1st of August 2025. If the Fed cuts in 6 months because of a strong dollar, you can come back and say like, you know what? I told you so.
Oh yeah, I don't do that
I'm joking, of course.
much. That I
Um,
save that for X, not here.
no,
Anyway,
I'm
all
joking.
right,
I'm joking.
all right. So here we go. What do
Yeah,
you?
by the way, we got about a minute. Got us you can pull off the data flash from Forex Analytics. The data flash is great because it gives you the data. I find it beats Bloomberg half the time, which is great because that's all I use I spent well, you guys know, well, Kman knows it's like 2,800 bucks a month. Have a friggin' Bloomberg system that you barely use except for using like the data release stuff. And it's like you get that right with Forex Analytics. Just find it in the over by the calendar.
I think that's
Um,
one bill that bothered you more than almost any other in the business.
it's like I understand the cost of doing business, but when I didn't, I'm not, I haven't been fluent in Bloomberg since we had one in 2001 was I was a little bit more fluent with it, and then I hadn't used one for like 15 years, and I
Well,
felt like I was paying for nothing.
you
But
have to learn Hebrew.
But yeah, it's more of our trades were going through the
Yeah,
system, so
yeah,
everybody could track what we were doing. But
yeah.
yeah, it's
Five
like, oh,
seconds.
here we go, here we go. Bad
73,
number.
4.2.
Get it. Let's get it. I bought dollar yen at oh 07. I picked it up at oh 07.
Yields are heading higher on that number. Oh, not anymore. Now I see it. Okay.
Um, I'm I'm
S&P's lower.
I'm starting to scale in on some lower prices here.
Dollar index coming off. Good. All right. So, so
Yep.
good call on the euro. How much
Hey,
higher is
hang
the
on a
euro?
minute. Hang on a minute. Have you seen the revisions?
Uh,
They knocked off 130K of the revisions of last month for the revision of last month.
oh my. Wow.
And
That's really some big downside. I don't know if I want to
all
stay
right.
long.
Well, anyway, good call on the euro being the strength
Wow,
prior
wow, wow,
to the
wow, wow.
number.
Hang on a minute here.
Yeah,
Well,
let's
I
take a
mean,
look at this.
it's up 50. Take half if you followed K and played Russian roulette.
So the dollar yen just dipped right to the 200 DMA and now it's bouncing from the 200 DMA. Just FYI.
Yeah, yeah. See the yen, the yen.
Yeah, this is what I'm looking
Yeah,
at right
yeah,
here.
and yields and bonds have been acting good. So anyway, like the quality maybe.
You have Pedro de Costa coming in or is he here?
He is here, but I can't promote him because you're the host.
Oh shit. Hold on. I'll do it. Sorry guys. Just trading. Just trading. Excuse me. Excuse me.
Only just trying to make a living. Don't let that get in the way
Yeah,
of
no, I mean that's
our guests, Blake. I mean, you could always make a living after all the action stops.
right. I'm fighting him. Hold on. Let
Yeah,
me get
he's
there.
under Pedro.
Yeah. There he is. I bet he was in the room with the Fed chair this week. So
They
here
don't
we
let him in anymore.
Wow,
They're
those
intimidated.
revisions, those that really hit the dollar today. Oh my.
Yeah, yeah, that's great. So we'll have a nice break to buy in the dollar.
Well,
Um,
Yeah.
yeah, I know you got to be a little bit careful down
I, w-
here.
I went out of my dollar yen straight when I saw the
Yeah,
revision.
me too. I was like
Uh,
in out.
but
yeah, I
it's
got stopped out of my yen short yesterday. It just was
oh
too
shoot.
strong, and now here it is.
Yeah.
Anyway,
We still
all
we still
right. Well, Ned, I
the
tell you, it's worse than golf trading. It's more aggravating than golf.
yeah,
Maybe
I mean it all
I'll, I'll
depends.
I'll
Just
retire from trading and work on my three putts. Um, I'm kidding. So anyway, what a great guest to have to explain what's going on with we had the Fed, now we have these numbers, and you guys, I really enjoyed the Three Musketeers, us going batting the ball around in the markets. I think there have been a lot of great ideas for the community that were free. And if people capitalized on it, peel a little off and take ForexAnalytix summer sale. And that's how you say thanks for what we do for you 5 days a week for 10 years now. Okay, so thanks, Blake. Have a great weekend. Came
You
in.
do the same. Thanks, guys.
Have a great weekend. You guys are
cheers,
elite.
folks.
Elite. You've made me a better trader, and I'm grateful for that. So let's talk to Pedro. Pedro, how you doing, buddy?
I'm good, Dale. How are you?
Good. It's great to see you. Uh, why don't we start off with what you have top of mind, and then I have some questions. Where do you want to start? You want to start with
Well,
Paul
this
yesterday?
let's start with the data because it has
Okay.
and the dissents actually. Because on the one hand, I was just thinking that the dissents, I mean, the data makes the dissenters look pretty good, right? Because the justification cited both Waller and Bowman put out statements this morning justifying their dissents, and both of them pegged the dissents on the idea that the economy was a little bit weaker than they believed, and that there was a chance that the job market was going to weaken, and therefore they wanted to get ahead of it. So that makes them look pretty good. But at the same time, we had a pretty, you know, unimpressive PCE yesterday from the perspective of disinflation. I had an interview with former Kansas City Fed President Esther George. She's very worried about inflation, and she worries that there's going to be enough of a pickup in inflation in the coming months that it'll really complicate the ability of the Fed to cut by September.
Will they
So
tighten? Is there any, no one even brings it up like it's out of the realm of possibilities. But Pedro, if we get a surge from the tariffs, isn't Powell going to have to tighten? I mean, we have 3,000 gold, right?
that's
I
the
mean,
thing. You're right. Nobody brings it up as a possibility, except you know who did bring it up as a possibility? Chair Powell himself. I don't know if you caught that, but in the
I
press
didn't.
conference,
I
in
didn't.
response to Nick Timmerow's question, he said, "Well, you know, why can't you just look through core inflation or goods inflation that's rising?" He said, "In a sense, we are looking through it because we haven't raised rates, despite the fact that core inflation has essentially stagnated for the better part of the year." So, to your point, I don't think it's out of the realm. I mean, if the economy is weakening at the same time, I do think that this Fed is just going to, despite their attempts to resist the political pressure is there.
No, no. You think?
Let's not forget that the two people who dissented used to be the most hawkish voices on the FOMC, and now they're the most dovish. They do have,
They have an
sort
axe
of
to grind, don't they?
well, they haven't. They have
They're
both.
auditioning, aren't they?
They have both they have a macro case to make, but then there's
Yes.
also the audition aspect of it. I think the
Right.
most cynical take that I saw was the research note headline from Mike Ferroli, and the headline was two job applications attached to FOMC statement, which I thought was a pretty fantastic headline. And his
Yeah, that's
point
pretty
was,
good.
don't take too much signal from a double, even though two
Yeah.
governors dissenting is rare, it's the first time since 1993. Don't take that as a signal that the committee was just on the verge of a cut, because these two individuals have a particular axe to grind, to use your words.
Hmm.
And so it leaves them in a difficult place. And of course, we had the hard hat visit to the Fed last week, which was quite a moment in Fed history that I don't recall. And I think one thing that people aren't talking about is the idea that all this pressure on independence really raises inflation expectations at the margin. I think there's this underlying sentiment in the markets that, sure, Powell might be holding the line for now, but whomever comes in next is going to have a difficult time doing so.
Yeah.
And they're going to be kind of open to the idea of inflating away the debt, which is how the president has very specifically tied the notion of cutting rates to the fiscal picture in a way that previous presidents have not, right? I think that's a really
Yeah.
important point.
Okay. Have you been paying attention to the dollar rally at all, Pedro? And does it even matter that the dollar is strong, which also tightens financial conditions, unless today was the end of it? I mean, now that I'm bringing it up to you,
I
dollar
think it
selling off.
matters, but I don't think it matters I don't think it's one of the top five things that's being considered by the Fed. And you saw that in the way that Powell answered the question about the dollar. There was a question from the FT about the dollar in the press conference. And he said it comes up in discussion. When the dollar was weak, it was cited as a potential inflation accelerant, right?
Right.
Uh, but I don't think that the rebound has been enough to change their mindset, not from a rates perspective. It might be
Okay.
affecting the way that the administration is thinking about their tariff policy, but because they, of course, do have, I think they do have goals to weaken the currency in the longer run, or at least
They do,
that's the
yeah.
market impression, right? That this is
Yeah.
a pro-export, kitchen sink approach to growth.
All right, let me ask you this very important question. Do you think that Powell and Trump, when they met at the Fed, looked like construction workers with their
No,
hard
I don't
hats
think they
on?
did. I
You
don't think they
don't see
did,
them. You don't see
but
them
I think
with their hammer.
Trump looked slightly more comfortable in a hard hat than Powell did. And it was the body language was kind of amazing. I mean, Powell, you have to give him credit. He held his own.
Yeah, he
Uh,
did.
he
He's
held his
tough,
own.
man.
He called the president out on the wrong figures that he had.
Yeah, yeah,
But in terms of the physicality of it, it was just hard. The size difference was pretty shocking, right? And like
yeah,
that one moment when he like sort of, you know, the friendly backslap. If you only lowered interest rates, I'd stop bugging you. And Powell kind of, he physically jolted forward because Trump is a big, strong man.
yeah.
So something that I never thought I'd witness in my life. But I do have to
Yeah,
say,
I tell.
Dale, I
Go
do
ahead.
have to say this, man. For years now, I attend every Fed meeting because we go down to the Fed to receive the statement and cover the decision, right? So whether or not
Yeah,
I'm in the room for the press conference, I'm still in the building
in
covering
the
the
okay.
decision. And and I have to say that for years I have been walking, especially after Trump took over and after Doge became a thing. I remember walking out and looking at my colleagues and saying, guys, I find it amazing that the unfinished nature of this very grandiose construction is not a bigger political story in Washington, because it seems like just something that's calling out for attention in terms of, if you're an administration that wants to call out, the
Yeah,
appearance of government inefficiency, that it seemed to stand out pretty like a sore thumb in the middle of Constitution Avenue.
yeah. Well,
But
maybe
then I thought, okay,
maybe they had some kind of troll with you that day, and when they needed another reason to go after Paul, your
I don't
comments came forth.
there were no trolls. It was just me and my colleagues, but I think eventually there were other people that and I think in particular there was one former Fed economist who's written about this stuff, and he did a report. His name's Andy Levin at Dartmouth. And I think his report got a lot of attention in the administration, and that's what led them to get fixated on that, on a potential source of leverage against the chair.
All right, I want to ask you this. I talked to Luke Groman earlier in the week, and he was talking about how Besant moved a big chunk of debt from the second quarter to the third quarter to try and
Yeah.
take pressures off of Treasury prices, and it really did nothing to alleviate rates. What's your view on what Bessent's trying to accomplish by doing that, and do you think they're going to go more to the short end of the market when they announce their refunding package?
Well,
And
we did just have a refunding announcement, right?
oh,
So
okay, so here it is. Okay, so I'm behind. So,
yeah,
uh,
so the
what do you
refunding
think of the
announcement.
mix?
So there is a little bit of a shift, and I do think that over the longer run they want to shift toward shorter maturities. I would push back a little bit against the idea that what he's doing isn't working, in the sense that I think there's so many pressures from from the pressure on Fed independence. I mean, if you think about it, in any quote unquote normal country, that right there is my interview with Esther George, by the way.
Mm.
Inflation could stifle 2025 Fed cuts. In any normal country that's not the US and that doesn't have the reserve currency, this level of pressure on the central bank from a president, I think would have led to like a 200 basis point spike in 10-year yields. And so I think that really you have to keep in mind that there is a natural upward pressure on yields that I think Bessent is trying to resist with all his might. I also think
Because
that
I mean,
there's a
the bonds have attempted to come out of the hole here, Pedro, And I've been a bond bearer for a long time, and I thought like TLT was going to attempt when we were doing this take out the
Yeah.
Moody's downgrade low, but man, they're looking good. I think they're going to take out this level and trade above it. And the 10-year, it was really tricky because it looked like a head and shoulders breakdown, and then we had the good data. But, just like people pay attention to the end of day as being important how it closes, the end of week is even more significant. And, this week shows a breakdown in the 10-year, and that we could be headed back towards 420 or lower. Do you think we're headed there?
I don't have a call. It's possible. I mean, I think range bound is kind of a better way to describe the 10-year
Okay.
yields, right? We haven't broken
380
out
to
of that.
470, like like
Yeah.
8 bips, 80 bips range, and we're going to stay
Yeah,
in
and
this
I so
range.
and I think there are two competing forces. Again, on the one hand, and I'm not sure which one is going to win out. On the one hand, there's the immediate fear that there's this bloated fiscal deficit with no even plan to bring it down. Um, you have this pressure on Fed independence, all of which should be pushing up yields sharply. But then let's say you're a trader and you're counting on Trump to appoint a friendly Fed chair who might not only accommodate the debt, but say potentially down the line do some QE to actually finance the debt, right? Do you really want to do you really want to stand in front of that train?
No.
And so I think traders are caught between this sort of short run 6 month calculation and what might actually happen to the bond market under an entirely new regime. I mean, we're even talking about a new Fed Treasury Accord, right? Uh, it seems like a very blue sky environment in terms of, I mean, let's put it this way. The idea of either the president or the Treasury Secretary playing the role of Fed chair has even been broached, right?
Yeah.
Uh, and I
Okay.
wouldn't rule out Scott Bessent as a potential top candidate for Fed chair because I think he has the trust of President Trump, and I think he's shown his loyalty, and I think he has enough market chops, and he's trusted by the markets that he might just end up being the president's pick.
Do you think
So
he's going to have to wait till next May, or it'll happen before then?
it'll definitely happen before May. I think the timeline has been pushed back a little bit because at first they were sounding like they might appoint somebody as soon as like September or something to almost to really make clear that Powell is a lame duck. But now Bessent pushed back that timeline and he said that the interviews would be happening closer to year end. So I
Okay.
think the field is still open, but my money is kind of on Besson at the moment, only because he looks the part and he has the president's trust and and
Okay.
ear. So
So I know people are, if these deals happen, and we thought we had a deal with Japan, but we're not sure. Again, you know, I've been talking about that tariffs aren't that much different where they're going to end up here than they were under Smoot-Hawley in the 30s. And back then, it went from 5 to 20%. Here we're going from 3 to 17. Back then, global trade was about 9% of GDP. Do you know how much of a percent global trade is of GDP in modern days, like now?
no idea.
Okay, so because you can't really draw parallels to it if it's not at least 10% of GDP. So, but there are
According
parallels.
according according to the Googles and the chats, it's about half,
Half of that,
48 to 52%.
half. Wow. So let me ask you this: with everyone's really concerned about prices, but what about supply chains with this and everyone moving it around? Do you think we're going to end up with bottlenecks and shortages, not just paying higher prices, but being able to get? goods that the U.S. is used to being able to have plenty of supply of.
I do, and I think that I think we're being too sanguine about how quickly that was going to happen. Maybe because our experience in COVID was so immediate, because the shutdown was so drastic, and so we
Yeah,
expected everything to happen within like 2 or 3 weeks.
yeah,
And to your point, this is a much slower process. We're just now actually implementing the tariff levels that were previously announced. Some of them are lower than the worst case scenario, but the levels are settling at pretty high rates, right?
yeah. It's still
I think
a magnitude of 4. Uh,
they've desensitized us to these rates, but like, a sort of 18%-ish effective tariff rate on the world, and we haven't even talked about like resolving what's happening with China. That's significant. And so I do think that's a lot of sand in the gears of global trade. And I think there's a deeper issue of trust and the reliability of future trade deals, right? Because
yeah,
we're talking about the fact that we renegotiated deals that were already set in stone with many of these countries, including Korea, Mexico,
yeah,
Canada. So when you come to these handshake kind of back of the envelope agreements, I don't think there's much trust. In fact, even with the EU deal, there was all kinds of different interpretations as to what they had agreed on, right? As soon as they announced an agreement, the two countries put out somewhat conflicting lists of what they perceived as the deliverables from each side. So
okay.
there's still a lot of confusion, and I think there is a lot of room for supply chain disruption in a way that is potentially
Yeah,
inflationary.
yeah, and I don't think uh, that we're prepared for that. So just something that
Yeah.
I wanted to bring up. Is there anything that you think, we have Jackson Hole coming up. It's amazing. It's August already. What do you think the theme is going to be at Jackson Hole this year?
Good question. We don't have a theme for it yet. They usually set the theme well in advance, so it'll be something like very 10,000 foot, you know,
Yeah,
and but there's two things at Jackson Hole. Basically, I think there's really only one theme to be had, because we expect them to unveil the results of their framework review around that time, if not in that speech specifically. And so I think it's really going to be about kind of recommitting to be stronger on inflation and moving away from some of the softer language that the Fed included in its 2020 framework review, including the idea that it was uh, targeting only shortfalls from full employment rather than deviations, as well as the whole concept, which was seen as kind of a little bit too wishy-washy, of inclusive uh, inclusive growth. See, those seem to be
okay.
the two concepts that are on the chopping block. So,
So,
but there is also
okay,
going to be we're also going to be right ahead of the September meeting. So it's going to be a very live uh, Jackson Hole in terms of, you know, the tidbits that we're able to pick up. We're already going to have the data in hand for the September meeting. And so the tidbits that we pick up from policymakers on the sidelines are going to be important
okay.
to informing the market's September rate cut expectations. And
Do
at
you,
this point,
yeah,
it's
go
interesting
ahead.
because if you asked me yesterday, I would have said September's unlikely.
Yeah,
But after
but
today's jobs number, I think they have
yeah.
decent cover for it. If they get another couple of decent inflation readings and the unemployment rate stays at 4.2 or even goes up to 4.3, I think they have cover to go by September.
Do you stay in touch with your colleagues in Beijing to get kind of a grasp of what's happening over there? Because I've seen some counts, technical counts that even though there could be much higher prices ahead for U.S. equities, even though we're entering a corrective period, that Beijing, China, Shanghai, FXI could revisit the April lows without us and a lot of other global exchanges. Is there problems? Is Xi his power being questioned, and what are you hearing about China? And are they going to not blink, and we're going to have a problem, even though we keep extending with them, to get a trade deal with them?
I don't know if it's the authorities being questioned. We do stay in very close touch with our Chinese colleagues, in particular to see whether or not, most recently the subject of interest has been whether or not Chinese treasury purchases would be part of the negotiations when it comes to
I
trade, right?
see.
Because that's
Okay.
something that came up in the whole Mar-a-Lago Accord theme.
Okay.
So that's something that we continuously try to report on. And there's been some evidence that the Chinese were actually willing to put it on the table. I'm
Wow.
honestly, with regards to the China-US relationship, I think Scott Besson has done an impressive job, honestly, of toning down the rhetoric and winning over his counterparts in a way that at least appears to keep the dialogue alive and constructive. Of course, the deadline
Okay.
has been pushed forward several times, but
Yeah.
I think it's important for these two countries to not be in a full mode of bellicosity, which was actually part of the expectation when Trump first came in.
Yeah.
So I think we're in a better place with China today than we were, on April 2nd, for
His best appointment, and came from outside the circle. I wonder who recommended him to President Trump, because that
Yeah, I'm
was
not sure.
really a good appointment. I mean, he was a huge currency trader for a long time. So, hedge fund guy. So he knows
Yeah,
how markets
ironically
work.
for George Soros, the ultimate funder of Democrats.
Yeah, right. So, yeah, a lot of people aren't happy about that guy. So, I really enjoy talking to you every time you come in here, Pedro, and you give us a lot of clarity. I recommend at the minimum you follow Pedro on X and check out his interviews. He talks to, Fed people, great interviews. He talks to really the elite of the financial world, unlike me, who just talk to guys that are scalping S&Ps for 100 handles. So, Pedro, last word. What should we be really looking for going into the fall, which is going to be the next time I have a chance to talk to you?
Sure. I mean, to me, it's all about whether or not this tariff inflation materializes, and that'll determine whether or not the Fed has room to cut, and honestly, whether or not Chair Powell makes it to the end of his term, because I don't think that we're at the end of that story, even though uh, he's been dissuaded. Trump has been dissuaded from firing Powell many, many times. Uh, we're still, like 10 months away
Yeah,
from him actually stepping down. And I think if there aren't a series of rate cuts before the end of the year, there's going to be more noise
yeah.
surrounding the possibility of a replacement. And Trump will probably choose to make an early appointment in order
Okay. Well,
to start to be able to set the agenda at the Fed. And keep in mind, he's already got two appointments. So he's going to have Adriana Kugler stepping down early next year, and
yeah.
then Chair Powell in May. So that's going to enable him to significantly reshape the board. And we've done some reporting on the idea that the FOMC, if somehow the president appoints somebody who's seen as kind of a stoogish loyalist who's just there to do the president's bidding, that the FOMC could somehow resist the chair by voting against him or her. I find that a little bit hard to believe. I've known the Fed to be a very kind of deferential institution when it comes to its leadership, and I can't see like some massive revolt against the president's appointee, in part because that would be seen as anti-democratic, honestly. So
Okay.
it remains to
Well,
be
I
seen.
mean, look, this is Paul's second season on The Apprentice. That would be enough
Exactly.
for me, right? Enough for
Exactly.
anyone. But
Exactly.
that's what it feels like. I mean, his favorite line on that show was "You're fired." So this is his second season. Not many apprentices got a second chance on the show, but
Very
Paul
good
was
point.
so fortunate to be able to go through another season, and we're fortunate that we have a relationship with you, Pedro, and you come in here and give us pearls for us to consider going forward with what the Fed may do, what rates may do, what the dollar may do. And I can ask you any question. You're there to answer it for me. And people need to learn about MNI so that they have great intelligence gathering from you and your colleagues. In my,
Absolutely. And I would tout
yeah,
the work, we have two departments that we have covered. We have our policy side which, as you can see from the front page of the website, that's the policymaker interviews, the sort of deeply reported stories on the direction of Fed policy. We also have our markets team that really tracks like every development in the market. So for instance, when we have the refunding, they'll have a preview of the refunding and a review of the refunding. When we have a central bank meeting for anybody in the world, they'll have a preview of that meeting and a review of that meeting. And those reviews and previews include like not only our house view, but an amalgamation of every view across the street. It's a very unique product where you get to it's a one-stop shop for the market consensus. So it's
yeah.
really a fantastic product.
All right. So, and uh, I think that Pedro's being humble, calling it fantastic. So, anyway, I believe that people should follow your work, follow you on X, check out MNI. And I just want to thank you once again, Pedro, for coming in here after the jobs report and filling us in with uh, real information. Nowadays it's more important than ever to know your source because of all the junk out there that you don't know if it's true or not. So you're a great watchman for all of us that trade markets. Thank you, buddy.
Thank you so much, Dale. Really appreciate it.
All right, Pedro DaCosta, everyone, follow him on X at P DaCosta. That's going to be a wrap for the week. Hope everyone had a good week. And instead of just surviving, survive like some people did. Next week we're going to thrive and have a great weekend, everyone. Don't just count your pips, count your blessings. And I'll see everybody on Monday. Thanks again, Pedro.
Thank you. Take care. Have a great weekend.
People are thanking you.
I
Great
appreciate
interview.
it.
All right, it's also recorded, so you guys could go back and listen to it again. And I'll see everyone. The team will be back. Maybe Ryan will be back full strength next week. Adios, everyone.